Welcome to the Real Estate Investing Podcast, where we help you unlock your potential freedom through land investing, real estate investing, and entrepreneurship.
Hi, everybody. Welcome back to the Real Estate Investing Podcast. I'm your host, Ron Apke, and today we're going to talk about how data and analytics is changing land flipping. So before we get into that, let's take a question from our Discord server. If you guys aren't already in that Discord server, join landinvestingonline.com/Discord. Would love to see you guys in there. So the question we have today is from Jake. Jake asks, what is the normal time frame for a new land flipper to turn a profit? This, Jake, is a question we get quite a bit. And to be 100% honest, I'm tentative to answer this question as far as like giving a time frame. I'm not one to put boundaries or limits on what someone can do, but I guess you asked in this question what a normal time frame is. That being said, we see most of our people who come in, take action, start sending mail, getting their first deal within 30 days. 25 to 30 days is a very, very normal time frame to getting those first few deals under contract. And then you got to sell the property. You got to actually buy the property through title, then sell it. So 45 to 60 to 90 days, somewhere in there is pretty normal. Like I said, there's people who will send mail their second day in the course. They'll get a deal by day 10 and then they'll make money by day 30. So like I said, I'm not one to put timeframes on this, but that being said, a normal time frame, probably 2 to 3 months to be a little passive on it. And like we say a lot, the normal upfront investment for this is $3,000 to $5,000. And I see people being profitable, making $15,000 in their first 3 months, because those first deals usually make you $15,000, $20,000. You put 3, 5 in, and you're all of a sudden up $15,000, $20,000. But yeah, that's what I had to say about that, Jake. But let's get into the show, guys. Like I said, how data and analytics is changing land investing, and it is still far behind like what houses are. What house data is, what house analytics are, what wholesalers are doing, what house flippers are doing in terms of data. And the reason behind it, the reason why data is behind in land in general is because there's so little competition and there's not much really pushing people to be more analytical or data driven or something like that. But let's get into like how we use data right now on a very, very basic level. How do we use data to choose areas, to price mail, and to get deals essentially? So let's start with that on a very basic point. So as far as like choosing counties, so we run data, a lot of key data points for choosing counties is days on market, how long things are selling in that particular market, how much stuff is how much has sold in the last year, how much is currently for sale, what does the current market look like? And we analyze different markets. We do not want to be in areas that are too quote unquote hot, where the days on market is 5, 7 days. You don't also want to be in something that is too cold where you cannot sell a piece of land. That being said, there's like a common middle ground that we go over quite a bit, but you can really do this anywhere in the country. Another key data point we look at is population density. So that's basically not getting too populated of a county. We like population density 200 or under people per square mile, which is pretty rural. So that's getting a county or two, typically, maybe even 3 counties removed from a decent sized city. So you go, I don't know, 3 counties removed from, I don't know, Austin, Texas, Charlotte, North Carolina. So long as you're not going towards another one of the major metro areas, you're probably going to be getting those days on market around 100 to 200. So that's what we do for that. So once we choose a county, we're pricing the mail. So what we do, we send them, and I know a lot of people listening have heard this before, but I'll explain it. So we send the sellers a piece of mail that is basically saying, I'm offering you $10,000 for your piece of land in X county. We can close in 2 weeks, but we are actually putting a price on every single mailer. And that's all done through Excel and mail merges and stuff like that. But every single mailer has a price, but we need to be accurate. So if we're offering $50,000 for a piece of land, we need to make sure that land is going to be worth anywhere from $100,000 to $120,000. So what we do for that, for pricing, is we pull a bunch of comps. So we pull comps from Redfin, we pull comps from Zillow, Land.com, all these comps, and then really analyze the market and look deep into what's actually going on. So I don't want to offer $50,000 for a property if there's properties in that area that are for sale for $80,000, because that's not a good data point. That's going to tell me that my property might sell for 70, 75, $80,000, whatever it is. But if I see if I'm offering $50,000 or want to offer $50,000 and I see a bunch of for sale at 130, 140, and they're getting a lot of interest, I feel pretty good about that 50. And then maybe I see a sold or two at 100 or 110. So that's how we use data on a very basic level with pricing and choosing counties. So let's get into our next segment. So, what I want to talk about is tracking your business data. So, what we talked about before is how we use like market data, how we use county data, all those data points to make decisions. Okay, now how do we track our data and how do we make decisions from that going forward? So, with this, we're sending, I mean, us personally, Daniel and I, or my company, my land flipping company, is sending anywhere from 25 to 40,000 mailers per month. So we have 25 to 40,000 leads being reached out to every single month. So it is key and very important for us to track what is coming back, how it's coming back, what our results are in that. So that's something we do with our KPIs. We want to see who is responding to our mail. We want to see what counties, what areas are bringing us what deals and what size deals. And then after that, once you acquire some properties, let's say I send mail to Hamilton County, Ohio. That's where I am. It's a metro area. I wouldn't suggest sending it. That's where I live, though. But let's say you wanted to send mail there. You get a piece of property, you sell it for $50,000, and then that's a data point. That is a really good data point. Maybe you bought 5 acres for $15,000. You got a killer deal. You bought it for $15,000, sold it for 50. And that caught you off guard, you selling it that high. You're like, okay, now I can go in and resend this mail in a couple months and be much more aggressive on my pricing. And that is going to get you a ton of deals. If you can become micro focused on 10 counties, you can make so much money in this business if you truly know the land market better than any other land flipper out there. So that's something to really think about. So another key part of it is business analytics. If you have a salesperson, or if you're the one doing, like, you need to know how many calls your salesperson is making. You need to know your employees' numbers. And more importantly, your employees got to know what's expected of them. So that is all data that needs to be tracked. And as your business grows, as your land flipping business grows, and we talk a lot about growing and scaling this business because that's what we think is possible. Like, we want this business to be more than just you. We have a ton of people in our community, just them doing $500, $1 million a year. But to grow this to $3, $5 million, you need to grow people around you. So that being said, like, tracking them meticulously, understanding what they're doing. If it's transaction coordinator or whatever, you want to be tracking your title companies even. That is a really key thing. If you have a title company that's taking a month, 45 days on average to close deals, you need to do some work and some legwork to find a new title company. That is not good enough for what our business is. You need to find a title company that can serve you and close deals in 2 to 3 weeks, if you give them volume, especially. So all those data points, there's so much I can go over. But the stuff we track, like I talked about, we track all of our employees. But on title companies, we track how long it takes for them to close. We track for our transaction coordinator how long it takes from us to get a purchase agreement to that all the way being done with due diligence. So that should be a 24 to 48 hour thing. So all these things we track so we can analyze our business on a higher level. So it's not just myself who's in it every day and just looking at the numbers. It's me looking at and then evaluating and seeing where we need to make changes. So those are really high level decisions. Even if it's just you guys, this is still important stuff to know. Like, you got to know, like, and then you can tell these sellers, if you're closing deals in 17 days from the purchase agreement, like, that is a really good thing for you to be able to tell sellers. So all that is really important. So the last thing I wanted to get into is the future of data in land. And like I said at the beginning, their data is far behind in land than it is other industries in real estate, due to not necessarily it being new, because people have been making money in land for hundreds of years. Uh, but that being said, land flipping has grown, wholesaling land has grown. There's more people, as people come into the space, there's going to be need to track data more. and there's going to just be systems, there's going to be companies, there's going to be apps and all that kind of stuff where there is a Zillow for land or something like that, because Zillow and Redfin and all these sites just aren't great for actually having the raw data. So I think that's where it's going. I think you being ahead of it now and starting this data tracking and understanding where you're sending mail and trying to improve on this every week, every month is really important. It's not going to be something where you go from using Microsoft Excel and just being very basic with the data, which is fine, to you being high level with the data. It is a step-by-step thing. Maybe your first step is getting our CRM and tracking a little better with that. I don't know. But that being said, there is a big future for data in this business, just like every other business. But really, that's all I have for you guys today.
As always, thank you for joining. Please do us a huge favor and like and subscribe our YouTube channel and share this with a friend. It really means the world to Ron and I, but more importantly, it could help change the life of someone else. Thanks for joining, and we'll see you next episode.